We've heard of 44,000 SMEs, 44,000 companies that should really be in an exchange somewhere and are not. We've heard of a lot of financing going into some SMEs through the banking industry. We've heard of a lot of activity that is outside the exchange, outside exchanges that's going on. Akim, you're not an exchange. You're outside the exchange world, but you're looking at a lot of investments. You're a bank. Are the exchanges doing enough to assist the growth and stimulate the growth and sustainability of SMEs, in your opinion?
Thank you so much, and good morning, everyone. Yeah, I think there's still significant room for the exchanges to actually play a key role in attracting SMEs to their markets. And I say this with all sense of responsibility. We've had a wave of SMEs on the Nigerian Stock Exchange, for example, about 2 decades ago when we had a second-tier securities market. We had a number of about 15, 20 companies listed on that exchange. We had it revamped in the early 2000s, late 2000s as well, to the alternative securities market. But what we have now is that almost all the companies on that second-tier security market, or the ASM, are not either viable or they are no longer on the exchange. And there hasn't been any remarkable activity, I would say, from the exchanges to actually encourage small-scale companies to list or to raise funds in the capital market. So I think there's still a lot of room for the either the NSE or the other exchanges to play a key role in actually attracting investors to that segment of the market and encouraging companies to actually list and remain listed on the market.
Okay, well, thank you very much, Akim. I'm sure some exchanges will be saying, well, we did get started, we're looking at what we're doing, and we're thinking we can move the ball along a lot faster. Edo, what's been your experience in BRVM on this issue?
Thank you. Good morning, everybody. I think that the SME issue is a very important issue for all the exchanges on the continent. On the BRVM, what we have done is to create last year a third board for the SMEs to get them listed on our market. What I can say is that our exchanges make 3 mistakes in terms of attracting SMEs to the market. The first one is that we assume that they are ready, they are prepared to get to the market. That is not true. We need to prepare them, we need to accompany them, and for that purpose, we at the BRVM, what we have done is to introduce in our region a program that we call Elite BRVM Lounge, which is a program that was developed by LSE and Casablanca Stock Exchange to prepare the companies to come to the market, to prepare them to have a long-term strategy, to prepare them to have a good financial reporting system, and also to prepare an equity story. For me, that is very, very important. The second mistake is to think that the demand side is ready to invest in SMEs. That is not true also. We need to prepare also this demand side. That is very, very important. We need to have institutional investors, retail investors that are willing to invest in the SMEs. That is not something that is already available on our market. The last one is that we are not interacting as we have to do it with the ecosystem, especially with the PE funds and all these accounting companies. That is very important because they know the SMEs, they can help to prepare them, and we have many of the PE funds that are investing actually in Africa on small tickets for small SMEs. They need to exit in maybe 3 to 5 years. So it is an opportunity for the stock exchange to partner very quickly with this PE fund to prepare the exit and to get them privileged the exit route using the capital market during the next 3 to 5 years.
Excellent, thanks, Edon. And you're touching on two of the three things you mentioned are extremely critical. All three of them are critical, but two of them we should really address very quickly here. And the first one is the demand side isn't there. And what we find is that the demand side or the funding side doesn't necessarily come from retail investors, some PE firms, yes. But we find a lot of it coming in through the big banks, IFCs, AfroXM, and so on. The interesting thing that I found, I mean, from IFC, they funded over 8 million SMEs to the extent of about $300 billion. Now, the interesting thing, though, is that most of that is dispersed through banks and financial institutions rather than through exchanges. And Kofi, it's a pleasure to have you here. Why are you going through banks rather than going through the exchanges when you're dispersing these funds and when you're interacting with, when you're funding SMEs?
Thank you very much, and it's a pleasure to be here with all these good people. Good question you raised. From AfroXM Bank's perspective, AfroXM Bank is a policy bank, okay? The bulk of our transactions, by nature of the way we are structured, has to go through financial intermediaries, okay? The most prominent financial intermediaries are banks, okay? So the bulk of our disbursements to reach out to customers, because remember, we are headquartered in Cairo, we have regional offices in 4 parts of Africa, north, south, east, and west. And that is the means with which we reach our customers and people who require funding. So the most feasible way of disbursing funding or reaching out to customers, particularly in the smaller buckets for SMEs, is through banks and some non-banking financial institutions have also lined up. We haven't used exchanges. Which is an interesting thing to consider. But maybe what we must be looking at, as we have realized over the years, is the challenge we have with doing it through just banks is that you lend to banks to on-lend to the SME market, you lend at X%, and you expect the banks to put on a small margin to make it viable for an SME whose financial capability is rather fragile, but the banks double and triple the margins, okay? And they do so maybe for right reason, that this is the risk I am taking in the SME, and therefore I have to risk reward myself. We cannot pass on the loan you have given me. You are not taking the risk of the SME. You are taking my risk as a bank. And therefore, if I'm passing on this lending to an SME, I need to identify the risk and price appropriately. So it's been a challenge. So SMEs haven't gotten the money. The money has gone into the sectors of oil and gas and areas where it shouldn't be going. And we are not getting the real impact or making the real impact. So what are we doing about this? AfroXM Bank believes strongly. We all know the problems with SMEs. They are fragile, they are market-driven, they are opportunistic, owner-managed, etc., etc., and they won't change. Okay, they will not change. SMEs will always be SMEs. What, therefore, are we doing to ensure that we can grow SMEs to the extent that they can begin to get listed on exchanges, to the extent that investors are more attractive to them? AfroXM Bank is doing a number of things. We believe in the fact that SMEs can only grow within a certain viable ecosystem. You need to create an ecosystem around SMEs. Okay? SMEs need to be integrated into value chains and supply chains. They are high risk, and the only way you can mitigate that risk is ensuring that they are integrated into supply chain. They are integrated into value chain. We need to stop financing production of commodities and exporting commodities. We need to begin to add value. It's only by adding value that we can create opportunities and jobs for SMEs. It's only by adding value that we can create new markets for SMEs. So we are putting together an SME incubation scheme. We are putting together a project preparatory scheme. And this is all targeted at SMEs, particularly, I must say, for those in the medium, depending on how you define SMEs. There's one thing that we should all agree on also. But many those in the medium, they stand a very good chance of being the champions in Africa tomorrow. And until we begin to create that ecosystem, begin to create a soft landing for them, we will keep talking about the challenge with SMEs. Unless SMEs are packaged to a certain credit profile, they will not look attractive to stock exchanges. They will not be able to meet the requirement of stock exchanges. They will not be able to attract capital. That is vital. Remember, capital is like water. It goes according to the flow. Okay? Capital never climbs up a hill. If it's a hill, it will run down. So, we need to create SMEs to be more attractive. And in doing this, Afrexim Bank has decided to do a number of things, some of which I have just explained. Thank you.
Thank you. Thank you. Now, we talking about the industry specifics, we're talking about the levels of risk in the industries, and back to you for a second. Do you look at any particular industries? This morning we heard from the entertainment industry, for example, the potential of that industry, where it's growing to, its the fact that it's so sustainable and self-sustaining, that it's come so far and it's got so far to go into the future. And then you have the solid minerals industry, then you have all sorts of other industries that you get into. Are you specific on which industries you actually seek to encourage on your platform, for example?
In our platform, we don't have any restriction on the sectors. We are looking for all the sectors, SMEs coming from all the sectors. When I take our experience, we launched last year our first cohort to prepare SMEs to come to the market, with 10 of them coming from all the sectors: IT, agribusiness, oil and gas, hotel and resort, and so on, and coming from 5 of our 8 countries. We are going to launch another cohort in 2 weeks, and so we'll have a total of 20 companies that we are preparing to be listed on our market. And I am happy to say you that one of these SMEs that we started to prepare 1 year ago is already ready to be listed. They already sent their application to our market authority. So I think that is very fine.
Okay, now I will still come back to you to ask you on the level of success that you have seen in SMEs. So an SME gets funding, for example, out of 100, how many of them go to the next level? How many of them do you anticipate will end in a listing? I'll still come back and address that. But for you, Akim, looking at you from a private equity, for an investor point of view, what are you looking for? And how do you determine which horse to back, which SME you want to get into and which one you don't want to get into? Given that it's across and you're agnostic to industry, given that you're looking for an asset that will grow, that you'll eventually sell. Before you answer them, you need to determine how you're going to get out before you get in, right? So, do you ever get into an investment and say, this I am going to sell down into an exchange? And if you have not considered that, why not?
Thank you. As a PE investor, as even VC investors, I mean, the major thing you look at first of all is the returns. You know, once the asset or the investment opportunity aligns with your own strategy, you need to look at the returns you are likely to get out of such an investment. Then the next thing is, how do you get out of such an investment? You go into some investments where the original owners will have a buyout clause, you know, or you look at opportunities of selling to another PE firm. Yes, investors occasionally look at the possibility of exiting through the stock exchange, but given the experiences that we've had in many exchanges in Africa, that is usually one of the last results. You know. And I think what needs to be done is that the exchanges need to also come together and agree on what are the things that they can put in place that will make PE investors or other large investors utilize the exchange as a primary exit strategy. Currently, that is not the case, and I think we need to look at that holistically. An opportunity is what Biola Alabi had mentioned earlier when she talked about capital being required for the entertainment industry. This is a very, very key area that if exchanges are able to come together, the number of large tickets PE firms are looking at investing in such industries, and they could think of exiting through the exchanges. But I think a suggestion I will make, two suggestions I will make to the exchanges are as follows. One, financial literacy. The exchanges need to spend quite a considerable amount of money towards educating the investing public, both new companies, about the benefits of actually listing on the exchange and the and maybe trying to get them some tax waivers, which is also critical. Another thing is that there is need for exchanges to show up what we call poster boys. Who are those that have done this very successfully? People look at successful companies, how did they get listed on the exchange from being a small player earlier on? So I think if the exchanges could work together and arrange on strategies to, one, enhance the financial literacy around companies, around investors, seeing that letting them understand that listing on an exchange reduces the risk of the company a lot, especially the corporate governance, which is usually enhanced, and also utilizing the benefits of poster childs. And please, I would like to say this is not a sprint. It is sometimes a marathon. If you're looking at short-term results, you may not get it. But if you have a long-term strategy, 3 years, 5 years plan, and you really invest in this is something that can be very, very profitable, and it will enhance listing on the exchanges in a short period of time.
Okay, excellent. I think something you said resonated, and I think it should be bouncing around the walls of this room, that if you're considering selling as a private equity firm, a sell down through an exchange, an IPO is probably one of your last options. I really do think, I think the challenge for us really as Asea is, how do we make sure that we're your first option? How do we position ourselves such that before you even think of selling back, doing a management buyout, you're thinking, what's the alternative and what's the preferred? And the preferred is, I'd rather go and sell to the public. I think I hear very clearly as well the level of investor education, level of investor engagement, as well as investor readiness of the company itself. So those are things that we will take in mind and I will consider. Now, given that we could get a more enlightened environment, would you say that we would be closer to, and I'll address it to you for very clear reasons, but would you say we're closer to getting a crowdfunding environment where we can crowdfund some of these SMEs and then eventually they grow into, is there a structure that you think would support crowdfunding and getting them into exchanges subsequently?
Personally, I'm not a supporter of crowdfunding, but in our strategy on the BRVM, we just want to attract medium-sized companies. Actually, that is our strategy. We are not focusing on small companies or early-stage companies. We are just focusing on medium companies because we think that we need to build confidence in the market. We need to have a company that come to the market and succeed. Because if you don't do that, if you bring small companies without any attraction for investors, we can lose confidence and our board cannot succeed as we want. So our focus is only on medium-sized companies. We try to prepare them. I think that is very important and key, as I said, using some rules that are higher than what we have as our market rule. The elite program is an excellence program. So if you pass through the elite program before coming to our market, we can have, as you ask, 100% succeed in terms of getting this company in the market. Because our objective at Stock Exchange must not be to give a short-term capital solution to SMEs. If you do that, if they get the money, they cannot stay in the market. We need to have them to build an equity story for a long term, to have a long-term vision, to know that if they come to a market, is to stay in the market for 10, 20, 50 years. That is very, very important. And crowdfunding, yes, it's a solution for some companies, but actually on our market, that is not our focus.
Okay, excellent. And you know, when you disperse down to companies, do you, by the time the company finishes its repayment, who monitors the company to confirm that the company is continuing along its growth trajectory, or that it's even growing? And from what I understand of a loan, once you're given a loan and you recovered your funds, then you're hands off from the company. Who is there to ensure that the company continues? And I would like to suggest to you, and I'll start the consideration from there, that maybe if you have a requirement that companies should be on a platform that monitors their governance and their continued growth, then they'll be able to get financing. That might bring some companies closer to the markets. It would ensure that there's more of a public interest, and also that they're held accountable to certain standards. Would that be of help to you and also to the SMEs to help them grow further?
Thank you very much. And this is exactly what the SME incubation scheme is all about. Yes, the incubation scheme is exactly what you're saying. We are looking for transformational SMEs. We are looking for SMEs who have potential for growth and SMEs who can leapfrog. Okay, so we are not only going to providing funding and pay the loans and we sit back. We're going to be providing funding, we're going to be providing technical know-how, we're going to be providing capacity building, access to new markets, and also monitoring them into the future. The agenda is to take them from a medium-sized company to become a large company that can stand on their own and lend and borrow on their own balance sheet and on their own terms. But to do that, we need to look for those companies that have the potential, support them. There will be challenges. Will we lose money? Sometimes we will lose money, but we lose money for the right reasons. And make sure these companies are transformational, that they can leapfrog, that they can grow, and we monitor their growth into the future. In doing so, on a half-yearly basis, we travel under a certain program, which is also under the incubation scheme, to different parts of the world, to China, to Japan, to the Middle East, to Europe. With some of these SMEs, we match them with similar like SMEs in those markets who started maybe 20 years ago as small operators but have become big players today. So we expose them, okay? We expose them, and this is the kind of hand-holding we want our partners to join us in. There are some very interesting schemes in Nigeria itself. Under the Tony Elumelu Foundation, we find out that they are doing similar things for SMEs, even in more difficult areas, and we encourage such partnerships and such growth. So yes, the SME incubation scheme will be working with partners and other actors in the industry to ensure that SMEs who are supported under the program are not left as orphans 2, 3, 4, 5 years later, but we carry on to see their success and support them to overcome challenges that they may encounter as they grow.
So just to tie that loop up, my side then suggests that as you are creating that, in that incubation scheme, that as you're considering each sustainable company, you're saying you must be attached to an SME program under an exchange. So that rather than you collecting their half-year financials and monitoring their growth, there's actually an exchange that they're reporting to, and the exchange is holding them up to those standards, which is what exchanges do.
That would be welcome. Like I said, I think it's a brilliant idea you mentioned about how we can foster closer relationships with exchanges and see what value we can get out of that. Exchanges are also part of the financial intermediary system. So I think we can explore such opportunities with the exchanges. to see how we can work hand in hand in providing support for SMEs. And I think generally, for SMEs to succeed and to get onto the exchange and all of that, everybody needs to play their role.
Right.
The private sector, the public sector and government, civil service, civil society, everybody needs to play a role. We all need to align our interests in SME success. Otherwise, we will spend a lot of time, energy in developing SME programs like many other institutions have done. And if the exchange is not moving in the same direction, then you will develop SMEs, but they just can't meet the terms of the exchange and cannot be listed, will not attract investment, and you have to force sell. And you know what happens when you force sell? It becomes a white elephant.
Right. Well, at this point, I'd like to very happily say, Asea, you have a partner. And really, from this point on, you can actually, the 45,000, I'm a bit concerned about. I think that number underestimates the sheer potential of this continent. I think that 45,000 just relates to a certain region in Africa, be it south, north, east, or west. And the reason why I say that is because from our perspective, what we did, which I think we've worked with a couple of institutions here, what we did was we created a similar portal or platform where SMEs can introduce themselves, they can be processed by due diligence advisors, and then introduced to private equity investors who then invest and then can sell them back into the market. So that creates that kind of sustainability. You have mentioned, and I think it was Edon who mentioned that sometimes there's a disincentive when the funding doesn't come quickly. And so we've got private equity on one side, and sometimes they misrepresent themselves in not being able to report their numbers and report their progress properly. So you have due diligence in the middle. I will open it to the floor for a couple of questions. I think we have about 10 minutes, 5 minutes left. So we'll take 3 questions from the floor. So can I just see if there are any questions?
Debayo from London Stock Exchange Group. I was very impressed by this panel and the discussions, and also just picking up on Mr. Manuve's remarks in relation to developing SME markets and essentially the areas of development that aren't there. Mr. Manuve alluded to the fact that possibly companies aren't ready, equally investors aren't ready, and therefore there needs to be some additional work there. I want to challenge that further to suggest that investors probably aren't ready because of the lack of research available on small companies and the ability for access to that. And I'm wondering, in both Nigeria and in Ivory Coast and other countries, what's being done to develop small company research to aid both private equity and other small cap type investors? Thank you.
So what's being done to gather information on all the SMEs? Is that Bukunda's question? That
proper sell-side type research.
Thank you. Rotary Odiri with Nairametrics. Mr. Adomako talked about all the players, everybody playing their role when it comes to funding of SMEs. And I wanted to get the panel's thoughts on the interest rate environment that these SMEs are operating in when it comes to the high cost of funds as far as roles being played.
Mine is very simple. There is a narrative which has always been there of the stock exchanges being the last resort when the PEs and venture capitalists are exiting their investments. So now mine, I wanted maybe to get advice from the audience or anybody there. What should we do as exchanges to make sure the narrative changes? Because I think also exchanges have value addition to these people exiting from there. So I want to take just advice on that.
Okay, thank you. My question really is to ask for the panel's views and thoughts on some of the comments you made around banks charging higher interest rates for SMEs. and smaller borrowers because of the perceived high risk, and so they're charging a risk premium. And the fact that exchanges also have such tendencies. There's a school of thought that believes that actually the smaller people tend to pay their loans better, and they should actually have the lower interest rates than the bigger firms and the bigger individuals. In countries like Nigeria, that is so true. You have so many people that are defaulting, and these are the so-called big men, big companies. So we want to challenge you with, and get your thoughts on that.
My question is actually to Akeem and also to Kofi. Is when you look at some of the investments that entertainment and media has had and the interest we've had, a lot of that has been outside of the continent. So we've had international VCs interested, we've had international PE firms interested. How do we get investors locally to see the huge potentials that the international investors are seeing? And what does that education mean, and how do we start that process? Thank you.
Thank you. Excellent questions. I would start from the issue of research, and I'll ask Edwin to just touch on that.
Okay. Thank you. Yes, I agree with Mr. Adebayo that the research issue is a very challenging issue in our market. But you know, to make research, we need to fund this research. For small stock exchanges, it is not very interesting for them to put money on research on SMEs. Actually, what we are trying to do is to do that for big companies that are already listed on our market. And we do it for mainly the companies that are for an interest for international investors. Because for our local investors, it's not a very big issue. But I think that is important to do that. But if you want to do research on SMEs, you need to have a very, very good program of research for many SMEs at the same time. Because if you spend your time to do it for only one small SME without any big volume on the market, you cannot have brokers or other partners to do it for us. So I think that what is important is to have many SMEs, to have a program to do that, and see how we can do it in our small markets.
Sorry, just to add to what my colleague has said, and also to the speaker, the question, the gentleman who asked the question. Research and information is very critical. So it's a critical ingredient of the whole gambit of solutions if you want to address the SME solution properly, with or without stock exchanges. It's still a very important thing, research. From Afri-Exim Bank's perspective, we, on a continuous basis, have a situation where we have solicited grants and also commissioned consultants to gather information and to continuously advise us through quarterly reports on what is happening in the SME space and in specific aspects of SME businesses. So if it is in, let's say, the food and agribusiness sector, then we have a clear terms of reference. We have clear objectives cut out for a group of consultants who are continuously working and giving us feedback. Remember, our portfolio is only in Africa, okay? So we look at different parts of the market where agribusiness can be sustainable and viable, and they continuously give us information. You need to have a continuous process of getting this information and research, because markets are dynamic and things are changing very rapidly. 2 years ago, it was useful to do something, but today, it may not be as useful as it was 2 years ago. So yes, research is important. Many organizations have a challenge in spending money on research, but research must be viewed as an investment. It's not going to throw you the returns you want tomorrow morning, like trading. And you cannot also just research, like he said, on a small sample. You need a significant sample to do this kind of research. So it's happening. What we would have loved to see is the collaboration on institutions who are researching. African DFIs, Afro-Exim Bank, AFC, PTA Bank, and a few others, AFDB, we collaborate on some of this research. So when this information is available, we share amongst ourselves. Some we put out into the public domain, doing our annual conferences, our AGMs, we organize conferences, and we launch this information and put out. But this is an important point, and if we want to really push the growth of SMEs, it's going to be based on data, information, and that's the future.
Excellent, thank you. And there was a question on the interest rate environment, an interest rate regime. Is it friendly towards SMEs, and what can we do? Do we need to set up a separate regime for SMEs, in which case more companies would want to qualify themselves as SMEs, I suppose, if it's favorable? How would you address that, Akim?
Thank you. I think there are two comments on the interest rate regime there, and the two comments I would just say they are spot on. Right now, we do not have a friendly interest rate regime towards the SMEs, especially from a country like Nigeria. I mean, we saw what Kenya did when they put a cap onto the maximum interest rate you could lend out to particular sectors, but that too was not properly received by the market generally. So that is still there. I mean, for now, the government has tried by coming up with all these intervention funds and seeing how interest rates could be lower to the deserving sectors of the economy. So we need to continue to encourage banks, especially, who have access to this pool of funds at the moment, to please understand the need for them to actually lend at very, very reasonable rates to the SMEs. Like Afrexim said earlier, I mean, right now, most of these banks, even when they have access to these intervention funds, they still increase the margins because they believe the risks are just higher. I mean, so it needs a lot of moral suasion for us to get to where ideally we should get to and make these SMEs have access to cheaper funding, and perhaps ultimately they could also grow into being listed on our exchanges. But while I still have the mic, I would like to address some of the points raised by Biola Alabi as well, on the fact that most of the funds that they've received, or indications of funding that they've received in the entertainment industry, have been largely from outside of the country. Why is it that we are not getting a lot of local investors pulling their funds together and actually investing in the country right now? I have three comments to make on that. The first one is, sadly, we do not have a large pool of funds, that could be targeted towards what I would say sophisticated industries like the entertainment industry, because it requires a lot of understanding. Today in Nigeria, we have close to 25-30 billion worth of foreign portfolio investments. And if you look at the local investment, about the same period, it's much less than that. The only significant pool of funds we've been able to gather have been through the Pension Reforms Act. And we are all aware that PENCOM, the National Pension Commission, has been very, very strict, and reasonably too, on how such funds could be utilized. At the moment, I've not seen any guidelines that allows them to be able to invest such funds in an entertainment project at the moment. The other areas that could have given us key funds into that sector are the insurance companies and perhaps even the savings bonds that are being issued by the government. Unfortunately, most of the savings bond proceeds are being used for recurrent expenditure in the government, by the government. Now, the last point is that the NIPC, which is a National Investment Promotion Council, has been working on changing the narrative so that we do not talk largely about foreign direct investment. We should be talking about domestic direct investments in major African countries like Nigeria. That is a mandate that we all need to key into. We all need to speak to our clients, our investors, and make them understand that there are a number of opportunities in the local market. Whereas today, most of the domestic investors, they like to see what foreign investors are doing before they follow suit. We need to be able to create that narrative that, hey, we are in Africa, we need to invest in Africa. And perhaps when we're able to put forward compelling investment reasons, we should see more of domestic investors actually putting their money in domestic investments on the continent. Thank you.
Yeah, on the interest rates, I think my colleague has said a lot about that, but it's a long-standing problem, okay? Will banks ever be benevolent to SMEs and lend to them because we are having a conference and saying SMEs are the engine of growth? My answer is no, okay? Bankers will always be bankers. They will look for great opportunity, they will exploit, they will look for where their money can be paid back, they will look for the lowest risk, and they'll maximize profit. Okay? You cannot throw this up to bankers and ask them for a solution. You've got to structure your SMEs into a situation where they begin to look attractive for bankers, particularly in markets like most parts of Africa, where we have moved into a more free market now. Many government banks have transited into private banks now. Okay, if it was a government bank and a government banks, they can give a subsidy and say, lend to SMEs at 6%, and that's it. But you disrupt the markets if you try to do that today, and even create more ill wealth for banks, as it were. The thing is to make sure that your SMEs are profiled and packaged well. Some of the things that Afreximbank does and other DFIs also do to encourage banks to be more favorable to SME is by offering partial risk guarantees. It's by, and when I say partial risk guarantees, I'm talking Afreximbank gives Bank X $100 million to invest in SMEs in the agribusiness. And Afreximbank says that we will give you a 50% guarantee for whatever loss you make in the SMEs, provided you go through a certain profile. Okay? That encourages banks to look at SMEs more favorable. But the key thing, like I'm saying, is to make sure that the SMEs themselves present a more favorable risk. And that is why we are talking about trying to integrate SMEs into supply chains and into value chains, ensuring that SMEs get into businesses where they are covered by the risk profile of larger corporates, where they are providing raw materials or packaging stuff or doing things that feed into the value chain of a more favorable risk business. And that's the way to go. It will be difficult to ask banks to take risk of SMEs, but consider that risk to be minimal. They will not. They may tell you they would, but in reality they will not. So I think the best thing is to ensure that we can package our SME business more seriously, more robustly, and also with a certain risk profile. I think in Nigeria and other parts of, I think in Kenya, Rwanda, they're moving towards rating some of these SMEs. Okay, so SMEs are being given ratings, and the banks as a whole are beginning to spec some of those ratings. So if you're an SME, you have a certain rating, you will qualify for a certain package of funding, which is more manageable.
And then there was also a very big one, which was the issue of exchanges being the last resort for private equity sell downs. Okay, but what would you want exchanges to do for them to become your first, your preferred sell down route?
I think exchanges need to, like I said at the beginning, there's a lot more work for exchanges to do to be a primary consideration as an exit strategy for key players like private equity investors and the like. There needs to be a lot more engagement. There needs to be a lot more understanding. What are the needs of these equity investors, PE investors? And really, we also need to decide, are we sure that the exchanges have enough depth to actually take these assets when they are being listed onto the market? Because private equity investors, they invest across several industries. Are we able to educate the investing public that we've done a bit of analysis, these industries are viable? If you invest in this company, you're likely to get good returns. The corporate governance is sound. There are a lot of benefits by you being an investor in this company. So there's so many things that could be done by exchanges, but I actually think they are low-hanging fruits. The first thing is to engage with the larger PE firms, and understand why and how they could make exchanges one of the exit strategies that they have. And if the exchange could work around changing the narrative and making investors understand that these investments are quite viable, I think you may see changes in PE firms when they are making decisions. And once you have one or two actually exit onto the market directly, let's use them as poster boys and let's flog them so that others could follow suit.
Yes, I think that we need to have a very real strategy toward this PE fund. In our case on the BRVM, we started 2 years ago to sign an MOU with all the PE funds that are working in our region. We get an MOU with them and we send them on a very active basis some information on the market, on the IP on the market, and we give them more information. And after that, what we do is to get them have some meeting with us on the evaluation of the exit. We benchmark this evaluation to other evaluation. We send them information. We make with them some non-deal roadshow to go to see investor, to see if they have appetite for the shares, the strategy, and so on. And I think that we'll get a result because this year the only IPO we have on the BRVM is an exit of ECP, a PE fund, and this will be the biggest IPO on the BRVM. It is something like $100 million exit for a PE fund.
I just want to chip in on one small matter that my colleague touched on. I think somebody asked about why local investors are not investing in the entertainment industry, okay, but external investors or foreign investors were doing that. In addition to what my colleague said, I think, look, you have to help investors and particularly the bankers. They don't understand this business, the entertainment industry, okay? Entertainment industry in Africa has had a long tradition of being entertainment, not commercially driven, okay? There's no economics in entertainment. They don't understand. It's as simple as that. You walk to a bank and ask them to lend you money to, for instance, I put myself on the spot. If you came to me and asked me to lend you $10 million to want to do a movie, I'm going to look at you. I don't understand the business, honestly. I just don't understand. And so it will take some time. I think it will take the actors in the industry to educate the bankers, to educate investors. Let them understand the business like they understand real estate, oil and gas, telecoms and cement business. If they begin to understand and they can see where their money is going to come from, they can see their returns, trust me, it will attract more domestic investors. Maybe foreign investors, their markets are a little more mature. They have seen it, they understand it, they know what's happening in Nigeria, they know how it's going to turn out, and so they are more favorably disposed to that. For those of us, the local boys, we don't understand it. We are trying, we are learning, we're reading, we're trying to understand how people make money, how the industry works, how it's regulated, and where the market is going. The more we understand, the more we'll take a bet on the business.
Thank you very much. I saw Alibaba turn around. I first of all thought he was looking at me that time was up, and then I realized that he was actually concentrating on what you were saying. And I'm sure he has a couple of things to say to educate you about what he's doing.
Yes, that would be well.
But it's very clear, and I think we have unfortunately run out of time, but I can see one more hand up. So can we just take that last question and then we'll round up. Please go ahead.
Thank you very much for the opportunity. I just want to say that indeed there have been local funds that have done in Africa that have invested in SMEs. I'm very, very happy to see that ECP, that is Emerging Capital Partners, is being mentioned here as a private equity fund in which some African local funds have been invested in that fund. And it means that African funds is working for Africa, because the pension fund in Ghana has invested in Emerging Capital Partners. Apart from that, you have other African funds that have actually done SME investments. And I must say that the best thing that SMEs can do is to have a good story to tell. If when you are giving funds, you are not able to give back the returns, as Kofi mentioned, then it becomes a problem. So then you now not have further investments in the sector. So what it means is that when any SME firm has the opportunity to get an investment, they must know that the story that they tell is going to have a whole big impact on that asset class. So I must say that local funds that have done SME investment, the major problem that they have had in Africa is to do with the attitude of the African SME entrepreneur. And that attitude whereby I think they need to enhance leadership and governance, that is very key. So I think that the stock market has a role to play here. Whenever you have an SME firm being listed on the company, it is not enough for the stock exchange to leave them at bay. It is very, very important that when they do an IPO or when they list, have a rights issue, whatever, it's very important that you keep an indirect watch on the board and management and what they are doing. They need to have a very, very, very strong board. Perhaps people like panelists like you could do some voluntarism and serve on boards of these SMEs, because most of them cannot even afford to pay board fees. So you need to sort of voluntarily give off your expertise to these firms, and it's very, very time consuming, because I've served on one of those boards before. You would have to take them, the leadership, by the hand and help them in a whole lot of things that they are doing, from strategic planning to cash flow management to financial management, you just name it. And then also looking at their costs and efficiency strategies. Right. So that's the contribution I have to make. Thank you.
Thank you very much. And on that note, it's very clear. I think exchanges and what we've heard, exchanges do need to set up a dedicated segment that would focus on the SME space. There must be structures in place, and I think it's up to us as Asea and exchanges to ensure that in each of our jurisdictions, there are structures that support the existence, the literacy, the abilities, the investor readiness of these SMEs. We should work a lot closer with institutions like AfricSim to ensure that even when they're dispersing, they're handing over the supervisory and oversight responsibility to us as exchanges, so we can actually keep an eye on them. And these are the kind of things that would make us more relevant to the SME space. And at the end of the day, when we call Akeem back, he'll be able to say, yes, we're doing what we're supposed to do, and we actually are the first option for him to sell down. So thank you very much, gentlemen.